Hey everyone, before we get started, I'm going to introduce my audience. My first audience member is Jocelyn Gunther. My second audience member is my dad, Dave Vanderweide. And my last audience member is my mom, Jeannie Vanderweide. Alright, on to the speech. So what if I told you that I could double my money without having to do any work? Well, I'm not lying, and you could actually do the same thing. So some of you are probably wondering, what is it and how can I do it? And some of you have probably already guessed. You can do this by investing in the stock market. So for today's speech, I'm going to inform you on what the stock market is, the trends of the stock market, some investing tips, and then I'll teach you a little bit about compound interest. So according to economictimes.com, the stock market is a place where shares of public listed companies are traded. The primary market is where companies float shares to the general public in an offering. So a company that needs money says, okay, let's sell 1,000 shares of our company, which is essentially a chunk of the company. And then the public offers them a certain price for that share. This is a quick way for the companies to raise money if they're wanting to expand or relocate and something like that. But eventually the company's going to have to buy back their shares because otherwise they'll be in hypothetical debt. So now that I've discussed what the stock market is, I'm going to talk about a little bit about the trends. There are some very obvious trends in the stock market, and according to Investopedia.com, the stock market returns an average of 12% a year on your investment. So if you invest $1,000 right now, on average, next year that will be worth $1,120. However, the profits aren't guaranteed. One year the stock market could go up 20%, the next year it could go down 30%. And one thing that's said is stocks typically grind higher and they gap lower. And that is because greediness isn't as powerful as fear. If investors are greedy, it's going to gradually go up. But once fear hits the market, it drops dramatically. So that's something that's very different. So generally there's 4 or 5, maybe 6 good years, and then 1 year is just really bad. And historically there have been 12 stock market crashes with an average drop of 41%. And right now we're actually at all-time highs, so it's actually probably an awful time to invest because we could be heading towards our next economic recession. So now that I've talked to you a little bit about market trends, I will talk to you about investment strategies. Now, don't get me wrong, I'm not a professional investor and I would definitely recommend you do some research before investing, but I can steer you in the right directions. My first advice is if you're going to invest in stocks, I would buy dividend-paying blue-chip companies. And when I say dividend-paying, it means that the company rewards investors that are invested with them by paying them a dividend every year. So they say, all right, every year we'll give you $2 per share you own of our company as a reward for saying thank you for investing in our company. Another type of investment I would recommend is bond. A reason I recommend the bond market is because it's very diversified. So diversification is you're invested in more than one stock. That way you will get more of the stock market trend up. Whereas if you just invest in one stock, they could go bankrupt. And even if the market goes up, you would still lose all of your money. So it's very important to invest in more than just one or two companies. And now that I've talked about investment strategies, I will talk about compound interest. Compound interest is perhaps the most intriguing part of investing, to me at least. It's the reason why, say, you were going to buy a new car this year. Well, the average cost of buying a new car is $33,500. Well, say you invested that money instead of buying a new car and you just stick with your old car. Well, 36 years from now, if the stock market does as it has done in recent years, that $33,000 will be worth $2,144,000. So I'm 20 years old. By the time I'm 56, I would have over $2 million just from starting with $33,000. So it's awesome. So in conclusion, I discussed what the stock market was, its trends and investment strategies, and how compound interest works. Now that the speech is over, you can do some more research on your own. maybe invest in the market or wait a little bit before the next drop, and then take a leap of faith. It just might pay off. So I will reintroduce my audience: Jocelyn Gunther, Dave Vanderweide, Jeannie Vanderweide. Thanks, everybody. Have a good one.